All right, welcome everyone. My name is Maddie Hornsby. I'm the project manager for the RIoT organization. Welcome to RIoT's Lunch and Learn series, the place where we spotlight the RIoT sponsors. Today with us, we have Varun Sadana, and he works with the Launch Place. And today he'll be speaking on early stage investments in a post-pandemic environment. Just a couple quick reminders before we get started. This event is being recorded and will be posted to the RIoT's YouTube channel and uploaded to the meetup page where you registered for this event. Additionally, if you have any questions, please feel free to post those in the chat box, and Varun will be answering those towards the end of his presentation. And finally, please keep yourself muted throughout the event. With all that being said, I will hand it over to Varun. Varun, welcome.
Thank you, Mary. Appreciate it. I am assuming you all can hear me okay and you can see my presentation.
Yep, looks great.
So my name is Varun. I'm at the Launch Place. We are a venture development organization. And I'll talk a little bit more about us, but I want to thank Mary and the RIoT for giving me the opportunity to talk to you all. We have been partners with RIoT since the inception of RIoT. So we do like companies in that space as well. We have a few portfolio companies, so it's always good to hear companies that are interested in that sector and to meet them and see like the innovation that's going on. Here's my agenda for the day. I'm going to talk a little bit about the Launch Place, our history, our investment thesis, share a little bit information about the COVID, like during COVID 2020, what happened in the investment world, some of the data from Q1 2021, and the Launch Place investment strategy last 12 months and moving forward. Then I also have some tips. Some of them are fairly generic that you probably will hear from some other investors as well. But what's the right way to get connected to investors? And then we'll have some time for Q&A at the end. And it seems like we will have a small group. So if there are questions in between, happy to answer them right then on a slide, or we can just chat about it later. So about us, so the Launch Place, we like I said, we are a venture development organization, and we were established in 2004 purely as a consulting organization, helping small to medium-sized businesses in consulting capacity. And in 2000. And when I say consulting, it was classic management consulting. We were helping businesses with business planning, market research, financial modeling, just procurement, international market. And during 2008, 2007, 2008, because we were seeing a lot of startups, we thought about maybe possibly having an angel network in our area, or maybe launching an angel network in our area because of the demand that we were seeing from startups that were coming to us for help. But then the crash happened, and of course, that was the worst time to raise capital for companies, but also for funds or networks. Nobody was investing. So that kind of plan just went away. We put it on a back seat, and we continue with the business of just consulting. And during that time, 2008 till 2011, we were in fact like super busy with doing a lot of process improvement, lean functioning for businesses, those kind of consulting projects. But the idea of having a fund or a network never left. And during the same time, like in 2011, 2012, the local foundation here in Danville. I should have mentioned, we are headquarters in Danville, Virginia. If some of you don't know where it is, we are, it's not Northern Virginia. We are very close to RTP and North Carolina, right across the border, and just north of Greensboro, 55 minutes from Greensboro, and 55 minutes, from Durham or RTP. Our headquarters is in Danville, Virginia, but we also have an office in Research Triangle Park at First Flight Venture Center. So So when going back to the story of how we started, where in 2011, 2012, when the foundation, they approached us, they, they invest in a lot of it's a traditional foundation that invests in, health, wealth and wellness for the community. But at the same, during that time, they adopted like economic development as their mission, and they reached out to us. If we can propose them a plan, and we worked on it, and a plan looking at best practices across the country and across the world, from different places, Chattanooga. We looked at Startup Chile and whatnot, and we came up with a plan and submitted to the foundation. We raised a $10 million, in 2013 from them, and based on that, plan, we launched pre-seed and seed fund two, pre-seed and seed fund one. And in 2018, we raised another $11 million. And with the plan from just purely a consulting organization, we launched those funds. We expanded our consulting to portfolio companies. We also offered some office space to our portfolio companies as well. So we just purely consulting capacity, we increased our capacity from just consulting to space, and also investment vehicles. I think I briefly talked about it. We still provide these consulting services, but if you are a portfolio company of ours, all these services are available free of cost to you. But for existing businesses, small businesses in this area, we still provide these services for a fee. And sometime it also means that we are engaged in small businesses, or maybe like Main Street organization or businesses that are they require our expertise and they want to evaluate their business idea or plans, and we are engaged with them. Like I said, we also have an office in our Research Triangle Park. It's a smaller office, but it is mainly to meet companies. And unfortunately, because of COVID, we have not utilized that office in a while. And in fact, I was just telling Maddie that we will be going to the office a lot more, and hopefully starting Friday, we'll be there to see companies, to meet companies, meet our partners. Investment wise, we invest and I'll talk a lot separately about pre-seed and seed fund, but we can invest anywhere from entrepreneurial ecosystem. So we do a lot of coaching workshops, mentoring services. Hi, Maddie, is there some problem with the internet, or is it okay?
You broke up for a minute there, Varun, but you're back now and I can hear you okay.
All right. Sorry about that.
No problem.
We do have a good network of executives. If a company or portfolio company of ours, they need some help with, say, possibly in finance, or like they are looking for expertise in, marketing, we do have a database of partners that can help the portfolio companies of ours and get those expertise. We also provide some space. Like I said, we used to have a lot larger space, but now it is only for our portfolio companies. And if they want to, if they're expanding in this area, we can provide them with a little space till they find their own space. Investment breakdown, our pre-seed. The funny thing is we launched, when we launched our funds, we started with a seed fund, but then because we were seeing a lot of early stage companies and a gap in the market, we see there are a lot of angel investors in the region. There are funds, early stage funds, but there was nothing like pre-seed. So you kind of lose on those deals, or you want to see some traction from them, and say that, hey, whenever you can meet certain milestone, you can come back to our seed fund to pitch. And most of the time, what happens is the companies will find other investors or they will move on to other regions. And you may or may not see those deals again. So considering that fact that there was lack of capital for pre-seed companies, and we may not be able to see those deals again, we launched this pre-seed fund. So in theory, the concept was that we'll invest anywhere from, we'll invest maybe $25,000 for like technology validation and say another $50,000 for market validation. Basically, we invest in from pre-seed, it is usually in tranches. So we'll work with the company, set up some milestone that the company and us, we agree on, that we think it is useful for the company and but for us to see the validation as well. And if the company is successful in meeting all those milestones, then we will release the other tranche. And if the company is successful in meeting all those milestones, then they have the possibility of pitching to our seed fund where we can invest a higher amount of dollars. So pre-seed, we can invest anywhere from $20,000 to $75,000. And for seed fund, we will invest anywhere from $100,000 to possibly go on to like 500,000, depending on this, how the company is progressing. But our median check sizes for seed fund is about $250,000. We provide bridge financing, and the way we are structured as a fund is meant to be an evergreen fund. So anything that, the exit that we get, they're going to go back to the fund so that we can continue to invest in other companies. Pre-seed investment, like I already mentioned, I do want to point out here that since it is a smaller chunk of capital, though we can do like equity, but most of the time it is a convertible note. And most of the time we are the lead investor and one of the first early stage institutional investor. We try to do it in a note, but we don't have to. If the company has other investor, we can do equity as well. The way it works is for the program, we have investment committee that consists of both for our seed fund and pre-seed. It's a 3-member committee right now who are angel investors or investor in general. So it's great for a company because when they are pitching to us, you are kind of also in front of some other potential investors or capital provider. And for a company to pitch to our seed fund, you don't have to apply for a pre-seed or go through pre-seed. They can, if depending on the stage of the company, they can always apply to our seed fund directly. Seed fund. So seed fund, the way we have set up is we have a what we call it as a seed fund advisory board, which consists of 5 people right now, and they, like I said, they are other capital provider, they are fund managers, both in North Carolina and Virginia. We can invest anywhere from $250,000 to up to $500,000 per company. Most of the time, the deals for the seed are syndicated with other groups. We can take a lead, but we are happy to follow other investors as well, especially if they are some of our trusted partners. We are able to follow their lead as well. Again, we can do note or equity as well. And one of the most important criteria for our seed fund is that since we are a venture development organization, we are a double bottom line fund. Basically, what that means is that not only we are looking for return on our capital, but at the same time, we are also looking for economic impact in our region. And how we are defining that impact is that the company that, any company that we invest in, say they are from, they are headquartered in Northern Virginia or RTP, but once we make an investment decision, the company has to create a minimum of 5 jobs over a period of 3 years in Dan River region. And how we define that region is it's city of Danville in Virginia, Pittsylvania County, in Virginia and Caswell County, North Carolina. And this is based on the guidance that we have from the funder that I mentioned, Danville Regional Foundation, that we need to create that impact. So sometime, if there's no clarity, you hear sometimes that, hey, we are asking the company to move their headquarters here, but that's not the case. We are asking the company to create those minimum of 5 jobs over a period of 3 years. And if for some company, this may mean that they may create their manufacturing site here. For some company, this could be back office, distribution center. So it all depends on the company, and we work with them. It's not that, hey, we invest today, tomorrow you need to create those jobs over a period of time. And again, we work with the company when we are doing the closing documents, that how and what kind of jobs there will be, and you sign a separate impact agreement with us on top of like all of the documents that any other investor will sign. Our typical process for due diligence and the way it all works is that once we see a company, we schedule a one-on-one, and this can mean like a couple of times we meet with them to understand their business model, product market fit and value prop. And we go from there, and then we formally ask them to apply to our funds. Then we do a kind of a light due diligence before inviting them to our advisory board meeting. That's where the SWOP presentation is right here. And that's where the company, come and present to our, committee and to the staff formally. And we typically, again, it all depends between different investors, but we give them 45 minutes to present, which is broken down between, presentation and Q&A. And then based on the presentation, as a committee, we decide if the company is going to go into a deeper dive due diligence or not. If it does, then we spend some good amount of time with the company. And this is the time we look at like all their material they have submitted. We do customer, interviews, existing, if they have investors, we talk to them and do our own independent market research just to figure out like, hey, if this is something that we are interested in investing or not. And if everything goes well, then there is we provide a recommendation back to the advisory committee, and then the decision is made if we are issuing the company a term sheet with a recommendation to invest or not. And all of this can take some time depending on where the company is, if they have their documentation straight, how long it takes to do our independent diligence, talk to potential experts in the field. It all can take like anywhere from 2 months to 3 months to like sometime we have seen even after going through the diligence process, and when when the lawyers get involved, sometime going back and forth, it can take like more than that. But our goal is to have a result or tell the company as soon as we can. And for some reason during a entire process, if we see that, hey, there are some red flags for us or risks for us that we that may not be work for us, so it's kind of a deal breaker when we try to inform the company as soon as possible, so we are not dragging out that process for a longer period of time. Focus wise for industry, I kind of say that we know what we are not going to invest in. We try to be industry agnostic. You can see like types of industries that we invest in. We will not invest in anything that requires substantial capital or takes a lot of time to get our return. This is just a snapshot of a portfolio company of ours. We have invested in about 23 companies right now, and his, it's just logos of the company, and you can see some of them are, you probably have seen the names, and some of them are from North Carolina, and some of them from Virginia, and a lot of them from RTP, Research Triangle Park area, which is Raleigh-Durham area. I will. This is old, but from 2017 or 18, but we are still proud of, and I would like to share this. That though we launched in 2013, I think that's when we made our first investment. In a few years, we were ranked as one of the most active investor group in Southeast by Angel Resource Institute that compiles a lot of investment data for angels and seed data, seed investment data. And in 2017, 18, we were ranked one of the most, most active group in the region. Other than investment, I would like to point out that we are part of like bigger ecosystem. We want to make sure that the entrepreneurs and CEOs that we are working with, it's not only a check. We provide other services as well. We provide some education sessions. We do host two of our signature competition. I'll talk a little bit about the Big Launch Challenge, but two of the competition are Idea Fest and Big Launch Challenge. Idea Fest is a smaller competition, which we host typically in spring, end of March, early April. We will have like over 100, 125 applications, very, very early stage companies, a lot of them from universities. They have won different pitch competition in their respective universities, and they will apply to the Idea Fest. And then we'll select 20 companies to come and present to us in front of a panel of judges, again, experts in their field. And there is a prize money associated with it. So, with that, 3 minutes of presentation and pitch and 2 minutes of Q&A, somebody can win like $5,000. And Big Launch Challenge is a bigger version, I would say, of Idea Fest. We do get about 60, 75 companies. And then, but these are the companies that are further along. The prize money is a little bit higher. And we only select like 8 to 10 companies for that. Usually that the Big Launch Challenge is usually in spring. And I'll share a little bit more information about it later in the presentation. So far, that's about us, about the launch place. And does anybody has any question about us, or should I just continue?
Varun, we did have a couple questions in the chat. So one of them, it says safe notes, question mark.
We do not. I'll be very honest with you. That's not very prevalent in Southeast, and we typically don't invest in a safe note. If a company that previously had a note that before they connected with us, and if we are interested, then we try to make sure that all that is cleaned up, and if it is an equity round, then we make sure it is converted. Or if it is going to be a note convertible, traditional convertible note, then we try to make sure that they're on the same terms. Time frame between the first contact and decision to invest. Again, like I said, it depends on when the company started. So for example, we are on a schedule of our investment meetings are every month. So if we just had an investment meeting and then we connected with a company right after, then it will take some time before we can invite a company to the next meeting. But say if we made a contact with them, we did our early due diligence on the company and decided to engage with them and bring on board after the presentation. When they present it to our committee, I would say it can take 60 to 90 days to make a decision, investment decision. But like I said, if there is any time in between, then there is a decision not to invest for any reason, then we try to communicate with the company as soon as possible. So we are not prolong, and we don't want to, waste anybody's time, especially like founders' time, so that they can, potentially raise capital from other groups or other investors. I'm going to jump back to the COVID related segment of my presentation. So last year, I did a presentation on this last year too, and back then I would say there was a lot of anxiety in investment world, and we were very similar to our peers in terms of what was happening during early 2020 from March onward to, like, I would say Q3, Q4 of last year, that there was not a lot of capital. Everybody was focusing on their portfolio company. There was anxiety, how long this is going to last. But we saw that overall the VC industry was fairly resilient in 2020. In fact, it turns out, and by the way, this all data that I'm sharing, it is coming from PitchBook and National Venture Capital Association. So if somebody has interest in reading more, you can find this data online. We in fact saw that 2020 ended up to be one of the years with highest investment in terms of both like deal count and also the value of investment dollar amount. And 2020 was the first time the investment dollar amount across 150 billion, which is crazy that there was a lot of anxiety early on, but then the year ended up to be one of the biggest year in venture capital history. I do want to point out that I don't think so it gives you an entire picture because a lot of these deals were later stage deals as well. I will share some data for angel and seed investment. But I feel like a lot of these numbers are for like what, the industry call as like mega deals, which, companies are raising $500 million and whatnot, or above that, right? So there is a little bit of, skewness to this data related to like mega deals. But I also think like a lot of investors, they were on the sideline early on last year, and probably there was a lot of capital that was held back. And at Q3, Q4, investors started to feel that, hey, they can deploy this capital. There was a lot of positivity in terms of, at least here in the US, that the rates were, cases for COVID were going down, and vaccination news. So I believe there was a lot of those capital that was held early on was in fact like deployed later in the year. At least that was very true for us, the launch place, and I'll share some of that information later too. And I also think because there was a lot of influx of additional capital from government, the private investors could invest more. They felt more confident, and we saw an increase in investment dollars overall in 2020. So what about like angel and seed deals? So based on this chart, you can see that when I saw the numbers for last year, you can see from Q1, Q2, it was not as high, but they were equivalent to like Q1 and Q2 of 2019. Q1 was down, but again, just the seal and angel deal also saw like same upward trend in Q3 and Q4. That's what we are seeing. The momentum is going on in early 2021 too, in Q1 this year. But I still like to say that since they don't give you too much of data about, because it is private investment, a lot of these, you don't have like granular data. But a lot of these deals are like for, that also include, for example, I included this asterisk here that, for 2021, though they are saying that, and they expect that 2021 is going to be even bigger year, bigger quarter when they close the entire Q1 in the reporting for PitchBook, that it is going to be much bigger than last year or even 2019. But I also think that, like, if you look at it, 10 angel deals, seed deals were at least north of $25 million. I won't typically classify a round of $25 million as an angel deal or a seed deal. Typically in our area, which is Southeast, in Virginia, North Carolina, even in going south, that's not like the typical round sizes. I would say most of the rounds for seed, and we are seeing that the round sizes are a little bit bigger than it used to be, but it won't be $25 million round. Usually what we are seeing is somewhere between $1 million or $1 million to $2.5 million. The seed market, you saw, but in 2021, we are seeing a lot more deals. The good news is that both angel and seed deals, they crossed like $1 billion for the second consecutive quarter, which is a great news. That again, like the anxiety that a lot of investors had early on in 2020. And that's kind of fading away. And a lot of investors are actively seeking opportunities, including us. And the last bullet point here is exactly what I said before, that the median deal sizes continue to rise for both like angel and seed deals. Again, this is a national data. It may not be exactly same for Southeast or like in your even smaller region. Other than PitchBook, so our friends at ACA is the Angel Capital Association, which is the association for most of the angel groups in North America, and also their members are from Europe and Australia and New Zealand. So they are very active in this space. They collect a lot of data, and they have this Angel Founders report, which is a great report that if you all have a chance to look at, just to get like more insight about where the investment are going and valuation, things like note versus equity, all those things are available through this report. But why I wanted to point this out was that most of the investors, groups, networks, funds, they adjusted to like the COVID environment, doing a lot of business online, doing these meetings online. And from this chart, so what Angel Capital Association in their report they did was they did a survey in April last year and also in September. So based on that survey, you can see that there was a lot of anxiety early on, but by September, only 34% of survey participants suggested decline in investment in 2020. So you could see that they were expecting to, it will stay the same, or in fact, it will increase. So the early anxiety was kind of fading away, and we expected that they will continue to invest more. And this is again one of the other graphs from them, which says that they expected investment in new deals is expected to increase from like they thought that 2% to 19% interest in investment in new deals instead of just like focusing a lot on portfolio companies. So again, a good sign. And we are already seeing the result of this based on the PitchBook data, which compiled the data for entire 2020. Am I moving way too fast, Maddie, here?
I think you're doing great, Varun. You did have a quick question in the chat, though.
Okay. Let me see.
So, yep, if you want to read it, or I can read it off, whatever you prefer.
So there was a question about how do we follow up with the companies. This is a very good question. Again, we try not to be a passive investor. So it's not like, hey, we write a check and we'll see you at the board meeting or see you at wait for your quarterly updates. We don't want to be, over aggressive and be part of your operational team, but at the same time, we want to be active in the sense that, hey, if the company is having any kind of challenges, we address them with the company, make sure that if we have resources, we address those. We are familiar with like their cash flow, runway, or like if they need any kind of assistance, BD work. For example, like we invested in a company that was that had a product for manufacturing companies, right? From our consulting, we did have a lot of companies in that capacity, and so we connected them to these companies, and which eventually some of them became their customers. So it was both helpful for them, but at the same time, very helpful for us because we could get feedback. So the point I'm trying to make is that we try to be we try to be follow up with the company as much as we can or as much as the company wants. So formally, like the reporting wise, they are in our documents, in our legal documents, they are supposed to submit their reports or quarterly statements. And we also sometimes we take a board seat. Sometimes we just take the observation rights. So we are part of the board meetings. But in terms of just formal documentation behind like meetings or follow up with them, it is usually quarterly. But we are accessible to companies as much as they want, and we try to reach out to them just to check on them. Especially during last year, we spent a lot of time with the companies in terms of where they were, sharing information about different resources, government resources, grants, or, more planning about like their runway and capital strategy. And it was a lot more interaction. I do want to point out that some of the research, again, that is done by Angel Capital Association, they have seen that, and it may not be causation here, but they have shown some data which suggests that the more interaction that a group or a fund they have with the company, and vice versa, the results exit and results for the founder and the CEOs and the employee, the exit and all those are higher. But again, there may not be a causation that, hey, the more interaction you have, the better results are going to be. But we have seen some kind of, correlation there based on the data that they have submitted. Sorry, it was a long answer to the question, but yes. The second question is for those applications. Yes. So the second question in the chat was that if you explain why we don't fund. So here's what typically this is what we do. We will inform the company why we that, hey, whatever the decision was, but at the same time, because we see a lot of deals, if we inform a company, I will make sure that we tell the companies that if they are interested in learning more, what was the reasoning behind, then we do a follow-up call with them. I do want to make sure that, again, that if a company is not interested, then they may not follow up and it won't waste anybody's time. But if somebody is very proactive and they want to learn more so that they can be better at with a presentation, or like when they are in mode of fundraising and they want to learn from it, we are very, very happy to do that. In fact, we made a decision, this happened last week, that we notified a company about our decision, and the CEO was very much interested in doing a follow-up. And we had a call this on Monday. We spent a good 30 to 45 minutes explaining some of the concerns that we had. And the CEO was very thankful. And some of them, those were the things that he was hearing from others as well. So it was what we heard was fairly useful to them. So TLP strategies during 2020, during COVID-19. So a lot of investors, they probably at least institutional funds, what we did was we focused a lot on our existing portfolio companies. So from March till like summer, we basically we said that, hey, we are going to take a pause on our new investment activity, but focus a lot on existing portfolio companies. We want to make sure that they were fully capitalized. We didn't know how long this is going to run, if they need a runway for 12 months or it is going to be 24 months. So for us, it was important that we focus a lot on these portfolio companies, sharing information about resources. And based on what we were hearing, and this was unique to us, we launched a program to help existing portfolio company loan program. Basically, it was that, hey, we'll provide a low interest loan, some of the proceedings from our investment to companies that are in need because they were having challenges with the supply chain, for example, or because on the positive side, because of COVID, there was like exponential demand for their product, right? But they could not fulfill. So we launched this loan program at a very high interest loan, low interest loan to the company, portfolio company. This was not for any new companies or outside companies. We did not advertise this outside of portfolio companies. And from what we heard, there were a few companies that were able to utilize that, and they were very, very thankful for this. We also changed our investment thesis a little bit for time being, that we are going to focus a lot on companies that address societal changes due to COVID. This could mean that, hey, health tech related companies, or related to, say, for example, education related, or because people were inside, if there were like things or technology that were focusing on, a lot of folks were home. So if there is something that they can help with that. So we focus a lot on that and put a temporary pause on looking at when we started, then we looked at companies in those sphere. Of course, like a lot of groups, funds, we got onto virtual meeting. That was an adjustment, but this happened to a lot of people, individuals as well. And last year we canceled our IDFS. We took the companies applied for it, IDFS, but eventually we postponed that IDFS to fall, and then eventually we had to cancel it because we could not do it in person. But the Big Launch Challenge, we tried to modify a little bit and called it a Big Launch Challenge Light. Unfortunately, we did not have any prize money when we did it last October, November. But because it was online, we were able to get like terrific judges, panel of judges. These were some of most active investors in Southeast. And we changed the format that the companies can come and present, but at the same time, they will get like some one-on-one feedback from these judges, which we learned from the companies who participate that they really enjoyed that kind of conversation, to get feedback from these investors, and instead of just like pitch Q&A and like the second company. All right. So our strategy moving forward, I do want to say that we are open for business now. We are evaluating new opportunities, new deals. In fact, it turned out last 12 months were one of the biggest, biggest in terms of capital deployment and number of transactions for us. We did like 11 transactions last year between last June till like now. And that's unusual for a small fund like us. And this was because of the fact that second half of last year and early this year has been super busy. Moving on, of course, we'll host virtual meetings, but we are also going to do a lot of in-person meetings. We are hoping to do a lot of in-person events as well. I do hope that this RIoT, lunch and learn, which we have done in the past, is also going to be in person. And so because folks are vaccinated and restrictions are taken off, and we do hope to meet people in person and go back kind of new normal, which will be hybrid of both in person and virtual. We will continue to see a lot of health tech deals. This we have already seen early part of this year, but we expect to see a lot more opportunities in education, enterprise software, green technology, and medical devices, some of the things that we were previously seeing. So we hope to go back to that. We are already seeing some of the results, deals that we are seeing this year. I already in 2021, we are seeing a lot of opportunities for pre-seed. And again, some of them are even early for pre-seed. This is something that they are, just an idea, and the founder is just, still they have not done customer discovery or anything. So we will see a lot more opportunity for pre-seed. And for seed, like I said before, based on the trend, we also think that the size of the round for the seed are going to go up. And there will be a lot of opportunities for syndication with some of our trusted partners, funds network. The Big Launch Challenge, we have not announced any dates for Big Launch Challenge yet for the fall, but please be lookout for that news. If you want, please send me an email. We'll add you to our mailing list. But I feel like this year, Big Launch Challenge, we are still finalizing the dates, the venue and the programming around it. But it will be bigger and better this year. So please be lookout. If you qualify, I hope you will apply for it. If we have not heard from you before, we've not talked. And I know like RIoT, they usually include the information about the competition. So please be lookout for that and reach out to us. And we hope for you to participate or apply to the competition, but also just participate in general. It's going to be a fun event. Overall, so this is what we are thinking, but what I'm hearing generally is, overall in the venture industry, that there will be some, trends. We are already seeing that. This is COVID also, but a lot of these larger funds, they are moving downstream. A lot of capital was held back. So there's a lot more investment opportunities. There will be a lot of focus on impact investing, investing in diverse teams, and social funds, things like that. So so I'm assuming we'll be seeing a lot of that. I also think that because a lot of people are now working remotely, there will be opportunities, and this was the trend that we were already seeing, that investment was happening across the nation, though like Silicon Valley and the top 3 or 4 hubs, New York, they are still hub, but we will be seeing a lot of opportunities in places like Raleigh, Durham, or Austin, and that is a trend. But our hope is that we'll be able to see good opportunities, strong opportunities in our backyard in Virginia, North Carolina area. Sorry, I'm looking at my time because I want to make sure that we leave some time for Q&A. But there's always a question about how to get connected with investors. I think like some of those basics just remain the same even in post-pandemic world. Though there are some opportunities about like taking some conversation that you have like online to take offline now, but some of these basics are the same that I always suggest start early, right? Like as soon as like, hey, this is you are into venture, that there is you have done your customer discovery and all those things, and you will be raising capital. Don't be shy to get in touch with investors early. Even if they're early conversation, you're going to get some good perspective. it does take time raising capital, and it's not only for the launch plays, it is for other funds too. Depending on the size of the round, you will have to do this, presentation or pitch to investors, like multiple investors. And so my suggestion is just to start early, to build that network, to be in front of investors, get their perspective, learn about their investment thesis, right? So that you don't waste each other's time. It may not be a good fit for you because, they don't do any kind of pre-seed investment. I'm just thinking, or they want to see, like, for some funds groups, they have a criteria that will consider only companies that have $1 million in revenue, right? To hedge their risk a little bit. So, just try to start early, learn from your from investors, learn about their investment thesis. To reach out, I always suggest, like, we do have platforms that we use, which is, we use Gust to manage our deal. We also use Procedure, where companies can just go online and apply, and we'll get an alert. We'll look at those deals, opportunities, and we'll follow up. But most of the investment that we have done, 23 of them, they came from word of mouth. They came from our syndication partner. They came from our portfolio companies, right? Like somebody, a portfolio company founder or CEO, or like came from one of the accelerator programs that we know, like a RIoT, for example, right? So I think it is always, if you are targeting a fund or investor, just check through. If you have a common connection, get a referral from them, then get connected to them. Email list, some of this is sometimes it's personal. Some investors don't like to get email from potential opportunity, but I'm fine with that, right? Like I like if we talk to a company, and for some reason we see that, hey, this may not be a good fit now, but we want to follow up with them, I'm okay to give them our information so that we can, they can add us to their so-called like investor update or, partner update. And if there is something that triggers my attention, I'll follow up with them. So I don't mind. It doesn't, clog my inbox. I'm okay reading the updates from some companies and just hearing from them. But again, it's a personal. If an investor doesn't want it, I would suggest not doing that. And continue to focus on, product market fit, customer discovery, and explain it to the potential investor. If it is in a, email format, your email blast, or is it a one-on-one conversation? How to get prepared, like get connected. I would say, like, hey, if it was during COVID, or still if investors are not like meeting in person, just just invest in good technology. I would say basic. It seems like now Zoom has become more online virtual video conferencing. It is necessity right now. Everybody's used to it. So just make sure that you have a good setup for it. Try to leverage that interaction that you have online to do a one-on-one meeting, and share your follow-up. If you say, for example, if instead of cold email, if I hear from somebody like, hey, I heard you at RIoT Lunch and Learn, or we heard you were there at another panel discussion, and I wanted to follow up. There's a high likelihood that we will respond, versus like if it comes as a cold email that we don't know anybody from. So again, the basics remain the same. Try to leverage some of those online interaction to like in-person, meetings, and clearly explain your value proposition, and just keep on following up with the investor, right? Sometimes it is heartbreaking that you don't hear, but I would say a lot of investors, they like that, hey, the company is not giving up, and they want to follow up with the investors, and sharing the update. And I'm sure you will get attention of a lot of investors, depending on if you meet their investment thesis. I believe that was it from my end, Maddie.
Yep, and we did have one question in the chat room.
So there was a question from our friend Mike at SBTDC. He's saying that when you all do a pre-seed investment, are they usually syndicated? And if so, what is a typical range for those deal size? So we have done it both. We have syndicated, or we were like only investor. Again, like since our pre-seed, there is a lack of capital at pre-seed, early stage, say $25,000 for a company to just get started, or have like maybe second version of their product, or even first version of their product. So we might be the only investor, and we'll just do, we'll come in solely, and just to make sure that the company is able to hit some major milestone, and then we will release our next round. But we do syndicate in pre-seed too. We are seeing because there is a lot of and a lot of money, but at the same time we are seeing a lot of companies. It is a little bit of competitive because investors are seeing a lot more deal, and we want to make sure the companies are capitalized. There is a syndication opportunity too, but most of the time for pre-seed, on the highest level, I would say 500,000. But for example, we are looking at a deal right now, which is they are raising $500,000, but it is tranched out, and they're going to be doing 250 right now, and then 250 after meeting some certain milestone. And even for that 250, it is going to be syndicated. But then there was another company that we did recently invested in. Their entire pre-seed round was 250, but in that case, we did put a requirement that the company has to at least have some kind of, there was a range like matching investment from other private investors, because we want to make sure that, there are other interested party in it, and that if a company needs a little bit more capital, then we are not the only investor. Existing investors can come in. If we have to do a smaller bridge round, then the existing companies can do. Come in at a very short duration of time. So to answer Mike's question, yes, we do syndicate, and typically I would say it is sub $500,000.
Awesome. Thanks so much for sharing all that, Varun. Does anyone else have any other questions while we have a couple minutes left?
My contact information is listed. My email address is listed right there. Like I said, I'm happy to share my information. Please feel to reach out to me if you have any questions about the launch place, about the presentation, our investment thesis, pre-seed, seed fund. Happy to talk to you and possibly do a one-on-one meeting now. I feel like there was some questions.
Yep, and we just had one last question in the chat, Varun.
They're asking if there is a fee for syndication. No. So basically, this is syndication is what like investors, and what we do is we do have. So if there is a company, if we decide to invest in a company and say that company is raising $1.5 million, and we decide to come in at $250,000. At that point, we know that of course we want to invest, but at the same time, we want to make sure that this can take longer period of time. So what we'll do is we will share that opportunity with some of our other investment partners. It just becomes easier. Like, hey, if we decided to invest in it, then what we'll do is we'll also share our diligence with them. It makes it easier for that other group or network or fund to not waste. All of them are going to go through their process, but if we share our investment diligence summary, then it shortens the time. It is good for the company, but it is very good for other group as well. There's to answer your question, there is no fee associated with like syndication. There's of course the legal fee with the closing, but there's no specific membership fee.
Awesome. Thanks so much for that wonderful presentation, Varun, and answering all the great questions. Everyone, please reach out to them if you have any follow-up questions. But other than that, we'll let everyone get back to the rest of their day. Thank you so much for joining us.
Thank you all. Appreciate it,
Thank
Matt.
you all.
Thank you for your
Have a
help.
great day. Yeah.